Morning, everyone. Where are we? Oh, 8:31. Time to get started. Live on Facebook, LinkedIn. Why is my camera sort of in a weird? That's better, right? That's my Canadian coming out of me. Hey, Facebook, LinkedIn, YouTube, X, Instagram. Check over here. All systems go. All right, let's get moving. Welcome, everybody. December 4th, 2024, episode 311 of Welcome to Mornings with Scott, the best damn business show for medium and sized businesses on the planet. As I was logging in here and getting ready, I was enjoying a picture on X of Jagmeet Singh. Do you know Jagmeet Singh, the Canadian leader of the NDP, which is a Socialist Party of Canada? They don't call themselves that. The NDP Party of Canada. Think of them as your Canadian Bernie Sanders. So there's a picture of him in front of Parliament Hill, jumping into his very new looking Maserati SUV. I'm just going to leave that there. His Maserati SUV. Socialism pays well these days. Mercedes-Benz has developed a groundbreaking new solar paint that could provide all the energy you need for your daily motoring, presumably if you live in somewhere where the sun is, not where I live. Mercedes-Benz has developed this groundbreaking new solar paint that could provide all of the energy you need. Would you drive around? Would you? So the idea is they paint the whole car with this paint, and somewhere I think I copied the wrong paragraph into my notes here, but that doesn't matter. I think somewhere in Stuttgart, they decided that you could commute in Germany on average 38 kilometers a day in your Mercedes without ever plugging it in, ever using fuel, all because of this paint. The sun hits the paint, the paint converts it into electricity, which feeds directly to your battery or just directly powers the car. So here's my question as I was reading that. I'm thinking, would you drive around in a rolling solar panel machine? Like, what is that going to do to your body? I wonder very much about that. Hey, Ashley, thanks for joining on Instagram. I don't know if I want to sit inside a vehicle that is a rolling solar conversion machine. I was once being pitched Man, this is way back to the 90s in Toronto. What was the pitch? So there was a group. This is sort of at the beginning of wireless technologies, and they had created a microwave technology that would blanket the top of a retail store, and you could monitor traffic flows, and that would help you better merchandise. Blah blah blah. But the crux of the matter is, you're walking into a store that's just blanketed in microwaves. And so the CEO, the guy doing the pitch for the money, left the room, and the engineer was there. And I said, "Hey, man, how do you feel about this? Like, should I be walking around in all of these microwaves?" And he says, "Well, the bad news is about that particular issue. I mean, no, you shouldn't," he said. "But the bad news is there is nowhere that you can walk outside in downtown Toronto and not have some sort of wireless wave penetrating your body. If you could see these waves, there's no way around them. You can't escape. It'd be like one of those movies where they have they highlight the laser beams for the thief in the art gallery, and they're trying to get in." And he said, "So, the technology works, but if you want an answer to your question, I'm moving my family out of the city. We're just heading up to northern Canada where there are no wireless waves anywhere, and we're out of here." So that was the engineer's view of it. I didn't do the deal, by the way. Microwave technology back in the day. I don't know. I don't want to drive around in a vehicle that is a rolling solar machine. Have you been following this United Health? Sorry, so let me check my Instagram here for comments. Nothing over there. This United Health CEO murder. They hit on this Brian Thompson, who is CEO of UnitedHealth, which I believe to be the largest health insurance company in the U.S. And this Brian Thompson, I read, is a former PwC, PricewaterhouseCoopers PwC partner that is clearly murdered or whacked or something in Midtown in New York. What was that? 2 days ago? It just dominated the news yesterday. I was trying to avoid the story, but it's becoming more and more interesting. So the guy leaves his Hilton Midtown hotel at 6:45 a.m. Where is the Hilton? I think that's just behind the Waldorf at Midtown. And he gets killed walking a short distance to wherever he was going to give a speech that morning to investors, analysts, whatever, on United Health. And so the government comes up with a silenced gun and shoots this guy at least 3 times. It's all over the videos. And people on the first day of this said, "Oh, this is a professional hit. I mean, look at that." And then the guy escapes on an e-bike. And everybody in the news says, "How stupid is that, escaping on an e-bike?" And I thought to myself, have you ever ridden an e-bike? Have you ridden an e-bike? I mean, what more brilliant of a way could there be to escape in downtown Manhattan during rush hour? The things are fast. They're easy to pedal. They're unlicensed. They're unregistered. You can cut across anything. I think that's a brilliant way to escape if you need to in downtown Manhattan or some busy urban center. Anyways, the thinking from the first day was it was a professional hit, and then it migrated into, "Oh, no, this guy's just an amateur. And he did all sorts of things wrong, like he hung out in Starbucks by the Hilton for hours, drinking water and coffee beforehand, leaving a DNA trail everywhere and leaving his burner phone on the ground and etching or writing. There's some sort of message on the bullet casings. I didn't really understand that. To me, bullet casings are pretty small, so I don't know how you write a little novel or something on there. But anyway, so now they say that it was an amateur. The motivation was clearly that there was a denial of coverage and or a systemic pattern of denial of coverage, and they pissed somebody off, the wrong person off, and they went and killed this guy. I don't know. The only reason I'm raising this story is because it's all over the news, but I'm interested in the motive. Alan Dershowitz was on Fox last night on one of the shows, and he said, "Look, you get killed for something you did, right? Obviously wrongly. You should never kill anybody. You get killed for something you did, like denial of coverage in this particular case, or you can get killed for something that somebody doesn't want you to do, to shut you up, to keep you from doing something in the future. Well, this is a company that has insider trading investigations going on and allegations. It has fraud, medical fraud allegations coming at it. And, because the whole US system in healthcare is basically corrupt. And so you've got all this going on. Maybe this upstanding PwC accountant type guy, maybe he flipped. Maybe he was cooperating. Maybe somebody wanted to shut him up. Maybe this etchings on bullet casings or writing on bullet casings or whatever that ridiculous part of the story is, maybe that's a decoy. Maybe that's a decoy. I don't know. It's an interesting story, bit of a crazy story. We should keep an eye on it and see what happens. So Bitcoin was above $100,000, not last night, but the night before and into the day. And I was super excited. So there's a psychological ceiling in trading, right? Because, for weeks, Bitcoin was sort of bouncing around 99 to 94 to 98 to, getting up towards 100. Then it gets some sell pressure. And everybody smart, the traders, were saying, hey, when it crosses 100,000, it's going to go to the moon. It's going to go to the moon when it crosses 100,000. Well, it crossed 100,000 yesterday. Or the night before, got to a high of 104,000, and then last night it just started crashing. Well, not crash, but it got to a low of 92,000. So there's still a lot of pressure around this 100,000 mark, and the volatility has been pretty significant, which of course is going to crater the value if you're trying to buy equities in the futures. But right now we're at 99,000 and a half. So it's bouncing around all over the place. And I was asked yesterday, I had a long conversation with the listener of the show, where do I think it's going to go? I mean, Bitcoin, as I remind you, has no utility whatsoever. It is not a currency. It's not a cash flowing investment that has value in the traditional sense. It's completely supply and demand, But here's the thing. The bump the other day was premised on the idea that Trump is getting rid of the SEC chairman currently, who is against cryptocurrency and was putting up roadblocks to regulation, and replacing that person who's very friendly to cryptocurrency and from a regulatory point of view. And what the holy grail, I think, right now for cryptocurrency is, and Bitcoin in particular, is to have institutions move into the space and create demand, because the institutions are not in the space in any significant way whatsoever. This has all been global retail driven in terms of the market. But when institutions start holding assets in a more significant way in Bitcoin, it's going to go up a lot. And what do institutions need to invest in Bitcoin? They need they need an understanding of regulation and legislation to protect them, and so that they're not trying to skirt around things to get a little piece of this asset class. And that's what they're missing. And once they have that, once there's a regulatory framework that works for institutions to get into crypto, they'll be allocating some little small piece of their massive portfolios into this asset class. And so that is where I see this heading. There will be regulation. There will be a framework. Institutions will go into that. And you want proof? Check out the stock of MicroStrategy. What is MicroStrategy doing? This little dwindling, shitty software company taking a bunch of money, raising equity, raising debt, and taking those funds to do nothing but buy Bitcoin. Is they're creating a backdoor for institutions to buy stock, which is really a Bitcoin play. And so it's a backdoor. That's what he's created there at MicroStrategy, is a backdoor, and it is working very, very well before it all comes to a halt, because he's over leveraged. So we'll see about that. Long term, I see this thing going very, very, very high. I'm very bullish. Do not listen to me for personal financial advice. Listen to me for your business, but not personal financial advice. I'm neither registered nor qualified, no any of that stuff. But that's what I'm doing. I'm excited and in a big way into the long-term prospects, but not the short-term volatility. We may be kicking around here in the 90s for quite some time. Wall Street Journal had a headline this morning. Is this widely in this, excuse me, is this widely overvalued stock market doomed? Easy for me to read. There are two particularly scary forecasts for investors. Goldman Sachs thinks the S&P 500 will make a 3% a year gain over the next 10 years. This is a terribly written article, so hard it's even difficult to read. So over 10 years, Goldman Sachs is predicting 10% a year, 3% a year for 10 years. As big tech dominance eventually falters, and the Bank of America is worse, just flat for the next 10 years on average over the next decade. Their conclusion is buy stocks anyways because 2025 is going to be great, but then for the next 9 years to 34, if that's what that is, it's going to be flat or negative. I suppose that's what they're projecting. But the history also suggests there's no link between the underlying problem, as they say, by the way, is that it's simple to understand that stocks are super expensive right now. They're just overvalued vis-a-vis in comparison to their earnings. And that always means that the next decade is going to be relatively poor. But then the Wall Street Journal argues that that's not necessarily the case. There's never really been a historical link between nosebleed valuations like we have today and returns over the next several years. Expensive stocks can always get more expensive, as they often do. By the way, I'm just going to give you the insight on this article before we even get much further into it. It never once talks about the availability of credit and money supply. It talks about earnings. It talks about Trump derangement syndrome. It talks about the Magnificent Seven and whether AI is a real boom or not boom. But it misses what I believe to be the macro trend here. And the macro trend here is that money supply and available credit drives every single bubble and will continue to do so. That is the correlations. Earnings are important, but is that cause or is that correlation? Because free money and available credit also drives corporate earnings. Corporate earnings go up, stock market goes up. Is that because the earnings cause the stock market to go up, or is that because the free money caused the stock market to come up? Always think about the supply of money in times of restriction. You're going to find that markets and bubbles burst or go down. In times of expansion of money supply and lots of available credit, which is the cycle that we are in and have been in for quite some time, you're going to see asset values increase. My view on that matter. And by the way, Trump, if nothing else, is a free money guy. He loves free money. He harasses the Fed nonstop to give you a bunch of free money, or at least the institutions a bunch of free money. That drives up asset values. I'm bullish. I'm bullish on the stock market, no matter what Wall Street Journal has to say here. It says the S&P 500 and NASDAQ are at record highs, and the U.S. stocks are really, really expensive. 6 of the Magnificent Seven, Apple, Amazon, Meta, Microsoft, Nvidia, Tesla, are more expensive still, though Alphabet lags behind a little. Doesn't the concentration of the value of the S&P in the Mag 7 tell us everything we need to know, that that these valuations are driven by money supply and credit availability and not necessarily by fundamentals? In 2016, so about a decade ago, 8-9 years ago, the Mag 7, or the derivation of the Mag 7 at that time, made up 11% of the S&P. I looked it up this morning. It's now roughly 1/3 of the S&P. So everybody else that's outside the Mag 7, their stocks have kind of sucked or bumped along. I didn't do an analysis on it, but the real value is of the S&P is driving into these 7 companies. Why? Because it's not about earnings and it's not about valuation. It's about a bunch of things, of course, and it would be about earnings and earnings-based valuations in part. And it would be about new technologies and AI and artificial intelligence and these new capabilities in technology. Sure, that in part, but it's also about free money. And where do you park that? Do you park that in some mid-market publicly traded company, or do you think to yourself, well, Apple seems pretty safe. That's a good place to go park my money. That is what is happening. Wall Street Journal says the justification the bulls trot out become less convincing the more that stocks rise. The ones that are popular, the justifications for these valuations are artificial intelligence, like I said, rising earnings, and American exceptionalism. AI has supercharged the performance of the biggest stocks as the companies plow vast sums into data centers and specialized microchips. JP Morgan estimates the capital spending in research by just the Magnificent Seven will be $500 billion in the next year. $500 billion, $500 billion in the next year into data centers and specialty chips for AI, with a total corporate AI spend of more than $1 trillion in the US, which is bigger than the entire defense budget. Investors anticipate fat returns from this capital, but history questions that. And then it goes on to ask you questions like, ask some rhetorical questions like, is there really a business model for AI, which is the big debate. Investors are assuming all this capital spending will be worthwhile, said Peter Berenzin, Berezin, chief global strategist at BCA Research. He has turned negative on stocks because of this and his view that a recession is looming. He predicts the S&P 500 will drop to 4,100 by the end of next year. Last time I looked, that's far below the 6,500 to 6,666 from Goldman Sachs and B of A strategists, respectively. So we've got some strategists, analysts saying it's going to drop to 4,100. What are we right now? Around 6,000 and change, something like that. So this guy's calling for a 1/3 deflation of asset values, of stock values, because we're in a bubble. And then Goldman Sachs and Bank of America are looking for some growth in 2025. As a reminder, I'm not your financial advisor, but I am bullish. Lots of companies are experimenting with generative AI, but if actual use cases don't come fast enough, perhaps because of Gen AI's continued problems with facts and logic, investors won't get the earnings they expect. And speaking of earnings, it says that earnings have risen fast and are predicted to rise even faster, with Wall Street analysts expecting 14% growth next year. Remember, the earnings go up when the availability of capital goes up. Don't confuse your correlation with your causation. Michael Strawback, Chief Investment Officer at Swiss Bank Lombard Odier. I know Swiss banking. I do not know that bank. Maybe it's a newish one or more popular these days. It's not like we have some bubble-like behavior where the valuations of everything have gone up. It's been essentially backed by earnings. I think it's solidly footed in good earnings and good U.S. productivity. He might be right. But rising earnings and productivity were a big part of what was driving the market in 2000. This article goes on to talk now about the 2000 tech bubble, and it argues that there were earnings there. This is just nonsense. There were no earnings in the 2000 tech bubble. I'm old enough to remember when this tech bubble happened, and then it burst in 2000, 2001. I was in the financial services business. I had clients that had like 80% of their mutual funds wiped out in value from that tech bubble. It was horrible. But I also remember in the 90s, everybody just diving into this tech, and the nuanced argument in the Wall Street Journal that, well, telecom was making money back then. That was part of that tech sector. So that was making money, and the internet stuff was not making money. It was just a bubble. That's nonsense. Nobody understood technology back then. Yeah, the telecom guys may have been making money, but nobody drew a distinction between some dude with a website and a legit telecom company making a bunch of money. It was all just tech to us back then. There was no nuance. If you literally launched a website, you could have become worth about $100 million, which is $1 billion in today's money, it feels like. And so there was a guy in Toronto who did a reverse takeover of a publicly traded company, an old mining shell that had, no business in it. And he literally had a pot of jewels. He had like a bunch, I don't know where the jewels came from, maybe from mining, but literally a pot of jewels. And he put up like an online website, and the stock just went through the roof because tech, That's what it was like back then. It was not about fundamentals, and it all just disappeared. All right, so the Wall Street Journal, let's just cut that short. AI, earnings, American exceptionalism. By the way, I stopped reading this when it started talking about the American exceptionalism, because the idea there is you have global investors parking their money in the U.S. because it's safe, because it's safer than everything else that's going on in the world, because the U.S. dollar is strong, safer than everything else going on in the world, and because why wouldn't you park your money in Apple? And then the Wall Street Journal's Trump derangement syndrome comes out, and it says that's all going to fall apart because of Trump, and they're all going to take their money back, which is just nonsense. Just nonsense. Look, if there is a correction in the market, a huge one, a 1/3 correction, I don't see that coming. But if there is, and you're day trading, you're going to take a hit. You're going to take a hit. But if you're investing, if you can just hang on and wait for, and you're not levered, right? You haven't got a bunch of debt buying this stock. Like Warren Buffett says, this is a great buying opportunity when you have these crashes. That's where people make their wealth, not just money, wealth, when you're buying at those massive dips. If you're a value investor, if you're a day trader, if you're levered, if you're on options, well, maybe you're screwed. Maybe you're screwed if that were to happen. I have all sorts of stories about that from the 2000s, busting of the bubble, and new funds that were created. You know, they created, there was one group that created a fund, and it did nothing but promise you all your money back 5 years from now. That was the pitch. You invest, put 100 grand into our fund, and 5 years from now, you're guaranteed to get 100 grand back. That was their pitch. We will not lose money. We might make money. By the way, I'm not going to tell you how we might make money. I'm not even going to promise you we make money. I'm not going to tell you what asset class. It's very complicated. There's black boxes on a whiteboard. Maybe I'm going to buy some diamonds and go off to some island and hide out with that. But with interest rates the way they are, this was the pitch. If I take $100 of your money and I invest $68 of that into, a treasury bill or some sort of really safe interest-bearing product, through the magic of compound interest, 5 years from now, that's worth $100 again. And I've got 100 minus 68, $32 to play with. Let's say I give 10 of that to my distribution channel, pay my salespeople, pay my wholesalers. The rest of that's just profit for me. I could just pretend to invest that. And it turned out that this product was a fraud. But they raised billions, over billions of dollars on that stupid pitch, because people were so freaked out by the burst in the bubble back then. Globe and Mail reports that Ottawa is committing $2 billion to artificial intelligence. This is to invest in data centers and reduce computing costs for AI. And to skip ahead, I mean, this is through the, the Innovation, Science and Economic Development of Canada agency. So Trudeau announced this, the $2 billion to help Canadian companies and academia access expensive GPUs, the chips, and other infrastructure, not the chips, the GPUs and infrastructure generally called compute, that is critical to building and running advanced AI models. Compute is necessary to increase AI adoption, capture the economic benefits of the technology. The government said it has opened an application process to companies and public-private partnerships to access the funding. It later goes on in here to say that they also set up a fund, or part of this $2 billion. Oh, here we go. In the near term, another $300 million will go to subsidize the AI compute costs for small and medium-sized businesses in key sectors such as healthcare, energy, and advanced manufacturing. That is just buried in the middle of this article. But for you medium and sized businesses, let's say you're a manufacturer. Let's say you're in any sector, actually, but I like the manufacturing side of this. I have a career of jumping into troubled manufacturing companies. I own some historically troubled manufacturing companies, and you've got, presses from the 1950s, and they're not worth anything, and they're dirty. And then you compare that. I showed a video on this show a few days ago of BMW testing robots that are wandering around, and they replace all labor on the automotive line, and it's really phenomenal. And if you're trying to improve your business and make more money, how are you going to compete against the larger, wealthier competitors that have invested in artificial intelligence unless you automate and try to advance your manufacturing process, if I can put it that way? I just think that's everything. And I just wonder to myself, how do I, in my turnaround business, walk into a troubled manufacturing company that is legacy, that's, was built in the 70s, 80s, 90s, which are all over North America, all over the world, frankly. And I just think that their ability to compete is going to get worse and worse and worse, driven by artificial intelligence. But it doesn't have to just be manufacturing. Could be any sector. It could be services, health, financial. It doesn't matter. You're going to lose unless you have a way to invest in AI. So I think this idea, in Canada in particular, that there is a coming government program, if you believe Trudeau. I mean, you have to believe Trudeau, which is a bit of a stretch. But if there's actually money going into helping medium and smaller businesses afford and use AI to compete, I think that's brilliant. And I want to pay a lot of attention to that. In the interest of time, I'm going to pop forward. But it does say in this article that, and this was announced separately maybe a day ago, that the province of Alberta, which is one of the energy provinces of Canada, is making a pitch to companies to build their AI data centers in Alberta, and they're hoping to attract as much as $100 billion worth of AI data centers in the next 5 years. That's just a guess. They don't know that that's going to happen, so let's not count on that. But the way they're going to do it is they're going to promise some cheap natural gas, because data centers suck up a lot of power, and natural gas can be really cheap in Alberta and could be used to supply those data centers with really cheap power. That's a good competitive advantage. There's a lot of natural gas in Alberta. I was looking this up this morning. Do you know that in Alberta, they flare off, which is just like burn off into the atmosphere, 28 million gigajoules of natural gas every year, which is enough, for context, to power about 250,000 households. That gets zero revenue. They just burn that off into the atmosphere for various reasons. Back during the beginning of Bitcoin, remember when data mining was a bubble and a craze? There used to be, and I think it was some guy in Saskatchewan, built trailers, which were turnkey data mining units. So it was like a transport truck trailer, an 18-wheeler trailer, and you could just buy this thing turnkey. And then what people would do is they drive around to where the natural gas was the cheapest in northern Alberta and northern Saskatchewan, depending on the projects. And that was a real business plan. I don't know how long that lasted, but it seemed like a good idea at the time. I knew it was a bubble when my receptionist in a deal I was working on in Alberta was investing in one of these trailers. That's like the same as the anecdotal stories about the New York taxi driver who's really rich on the tech bubble, in the bubble before that. Anyways, it's a real deal. There's cheap gas here. There's electricity in Alberta, and it makes a lot of sense to go after that. I love that. Where are we here? 33 minutes in, so I should just wrap this up. Story, I forget if it was Wall Street Journal or the Globe this morning, but investment banks are eyeing a 2025 income boon as Trump drives deals, and they're going to rebound. We'll just make this long story short, because we're running out of time. But all the investment banks globally are hiring. They're bringing in new talent. They're gearing up. They're starting to pay bonuses again. There was a long time when bonuses were pretty limited on the deal side. They were maybe better on the trading side, but on the deal side, and people are looking for M&A. They're looking for financings. Everybody thinks there's going to be a boom. How do you have a crash in markets at the same time that you have a deal boom? Answer, you do not. So we've got the Wall Street Journal with a little TDS going through some angst. We've got one or two analysts on the bear side. We always have that. But the investment bank guys, the smart guys, are gearing up for a boom times. And coming from that business, I rely on that collective thinking quite a bit. I think that's good. Now, for you, in your medium and small businesses, deals, M&A, go buy your competitor, sell your business if you want to retire, refinancing. All of these things happen in a window. The deal market is very window driven. If these investment banks are hiring and paying bonuses and getting excited for a new year, you should be getting serious about whatever strategic transaction you think you need to do. It happens in a window. You can call me, reach out to me. Sinclair Range does that work for you, mid and small size businesses as well. What else do I want to say here? I think that's it. Thank you, everybody, for listening. Do I have comments that I need to jump on Instagram? I do not. I think we're good to go. Hey, this has been a Friday. Enjoy your weekend, and we will see you Monday, 8:30 Mountain Times. This has been Mornings with Scott. Thank you for listening.